Good morning, everyone. This is the third video of our Consolidated Appropriations Act of 2021 that was passed on December 31st. We have discussed the stimulus, frequently asked questions. We've discussed the changes to the PPP loan and the opening up of the economic injury grants and loans again. And the last part that we want to talk about is the employee retention tax credit. Patrick, what is the employee retention tax credit?
Sure. This is a tax credit that was passed into law with the same legislation that originally created the PPP and the IDL and the initial aid programs back in April of last year, March, April of last year, 2020. This was designed for businesses that did not get PPP loans. And what it does is it creates a payroll tax credit that shows up on your payroll tax returns for a portion of the business's wages that are paid to all their employees up to a set threshold. And it was an option that was available, but at the time, it did not look as appealing as applying for the forgivable PPP loans. We ran some calculations. The numbers were just not as good in terms of what you could get from this credit versus going for the PPP. So pretty much all our business clients have been encouraged, apply for the PPP. Don't worry about this one, because once you get the PPP loan, you're no longer eligible for the employee retention tax credit.
So with the passing of this new law in December, why does it matter?
Because as they've done several times already, they've changed the rules on us again. So now with the December 2020 legislation, the eligibility for this credit has changed. Where they previously said, no, you got a PPP loan, you can't have this credit. They changed their mind. Now you can have a PPP loan and get this credit. Makes it available for all businesses that meet the other eligibility requirements for this, which we'll touch on shortly. And this includes both the new 2021 version of the credit that the law created, because they changed it again there. But they also went back retroactively and said, for 2020, you can qualify for this credit even if you got a PPP loan, even though you've already filed all your payroll tax returns and done everything. You can now go back and get this credit. But because we haven't talked about it much, something we want to dive into really, what is this credit? And because it's almost two different credits, we want to take it one step at a time. Let's start with the 2020 version that went into effect last April. Jitin, would you cover what is the employee retention tax credit 2020 look like?
So the 2020 employee retention tax credit was available for employers that had less than 100 employees. The business must meet one of the following criteria. The government order related to COVID either partially restricted or closed the business operations related to COVID. When we think partially, we're talking about restricted occupancy, seating. Restaurants may have been able to only do takeout as opposed to seatings. They may have been restricted to 50 or 80% occupancy. So any government entity that put a restriction on their business, they could be eligible, or if they were closed. The other option is they showed a reduction of gross receipts of more than 50% in a calendar quarter from 2020 versus 2019. So to kind of explain it, let's say you had $100,000 worth of gross receipts in one quarter, and you went under 50,000 in 2020. That triggers you to turn on this credit. So the credit is basically 50% of an employee's wages up to the first 10,000. So that limits the credit to $5,000 per employee. For the year 2020, it's for the entire year. It is used as a credit against payroll taxes. And what they're talking right now is you fill out a worksheet on your 941. The reason we didn't talk about this was mainly because of the reduction in 2020 we didn't know of, so we told our clients to apply for the PPP loan. But now that it's eligible, our advice is for clients that did reduce their gross receipts under 50%, we need to go back and look at those wages and see if they can apply for the credit and get $5,000 per employee. Now, one of the caveats is once your revenue reaches back up to 80% of the gross receipts, you are not eligible for the credit in the following quarter. The other issue with 2020 also is any wages that you use the PPP loan for are not eligible for wages for this credit. So it's going to take some calculating and some work, but I think what most businesses and what we're looking at is, did your revenue drop more than 50% in any calendar quarter starting March 20th of 2020? So that is the changes to the 2020 version and what people need to be looking for in a nutshell.
And I think for most businesses, this closure one is going to be the big deal. That's going to get people in this area probably at least one quarter's worth of availability for the credit. To clarify, Jatin, that does not just apply to state level closures, correct? If the county or a city restricts.
Well, those are things that we haven't gotten a great deal of information on. So we're waiting for that. But I do believe that because you've been forced to close, I think you're eligible for the credit. And please note that depending on when you were closed, you have to make sure you line up your wages and exclude the wages of the PPP. So if you use PPP wages while you were closed, those aren't eligible anyways. So those are some of the things that we need to work out. And as we go on the video, we'll talk about outstanding questions. But for the gist, that's what makes you eligible for the 2020 credit and the requirements.
So that's the 2020 version. Now, of course, they changed it for 2021, making a brand new credit, which will be eligibility through June 30th. But as usual, they changed the rules again, which applies to just these two quarters. Jatin, would you like to touch on what's different now versus the 2020 version you just went through?
Right, so currently the 2020 version, unless things change, currently the 2020 version, the 2021 version, sorry, is valid through the first 2 quarters of 2021. It follows the same kind of structure as 2020 from the employee numbers and things of that nature. But there's a few big changes. Number one is instead of giving 50% of the first $10,000 for the entire year, there's 2 changes. You get 70% of the credit for the first $10,000, but instead of for the year, you get it for the quarter. So I want to make sure that people understand that the credit is not only for the year, but it's per quarter. The other thing is the income or gross receipts reduction is no longer 50%, it's just 20%. So to kind of put this in a big picture scenario, you potentially for one employee could get $5,000 in credits, payroll tax credits for 2020. You can get $7,000 for that same employee for the first quarter and an additional $7,000 for the second quarter. So this could substantially be a significant credit for a business. The other thing is the difference is you can actually use PPP money does not count against you for eligible wages for the 2021 version. Therefore, you could technically use round 2 of the PPP money to pay the wages, but still use those wages to have available for the employee retention credit for 2021 specifically. The employee count was increased from 100 to 500. So those are the big changes. Real quick, it's, three big changes is 70% of the $10,000, it's $7,000 per quarter instead of year, and PPP money for those wages are now still eligible for the credit, are the big changes. And that should be significant. So keep an eye on that as you go through the first two quarters. And one thing is the 2021 version, you should be comparing your revenue from 2021 to 2019, whereas opposed in 2020, you were doing 2020 versus 2019. So you're still comparing your reduction of gross receipts according to your 2019 numbers. That's basically the 2021 version.
So just to kind of summarize it in a nutshell, we're looking at the first quarter of 2021. We compare it to the first quarter of 2019. If your income drops, your total income drops by 20%, you qualify for the credit.
That's correct. Same goes for the second quarter.
Yes. So you're looking at it each quarter individually. Then once you qualify, you take your employee wages and you get a credit for up to 70%, or for 70% of the wages you pay to each employee that you pay for that quarter.
Up to $10,000.
Yes.
So again, this could significantly be big for certain employers because it could potentially be almost a $19,000 credit. $5,000 for 2020, $7,000 for the first quarter of 2021, and $7,000 for the second quarter of 2021.
And that's per employee.
Per employee, correct. So if I have 10 employees, I mean, that could be $190,000.
Absolutely.
So, you know, people need to pay attention to this. That's why we've been waiting for this video, because of the intricacies and the calculations of 2020 versus 2021. So Patrick, if you want to, why don't you go through a few of the big outstanding questions that we still do not know. We're waiting for further guidance. And I think that's going to be the biggest thing that we need to wait on. And if you have more information, or you are part of an association, restaurant group, hotel group, or things of that can answer some of these questions, we'd be more than happy to hear from you guys. Please send us an email or call us with some of these clarifications.
Sure. So the big questions that we have as we've been going through this, because they're applying a lot of stuff retroactively. First one is, how do we get the credit, that $5,000 for 2020? Do we need to go back and physically amend payroll tax returns, or are they going to give us a simple catch-up form? We're hoping for the catch-up form. That will be much easier than going back and trying to amend payroll tax returns for an entire year. It'll be worth it if we have to, but that's the big question is, are they going to make this easy on us, or are they going to make it hard? We don't know yet.
And with that, Patrick, the question becomes, if we have to amend returns, can we do it all in the fourth quarter?
Right.
Or do we have to go to individual quarters?
Right.
And figure out the worksheet? Because there is an actual worksheet for the employee retention credit on the Form 941 currently.
Yeah, so that's a question we're actively looking at, because we want to absolutely get this done as soon as possible for people that qualify, so we can get them their credits. And as soon as we know, we will be reaching out for sure to get that taken care of. Okay. Second one, what restrictions determine eligibility? Jim discussed, if you have a closure or restriction on your business, then you can qualify for this credit. If it's at the state or federal level, that's very clear. But what about if counties apply restrictions? What about if towns apply restrictions? Seems to be leaning yes, but we're not 100% on that. What if other outside entities apply restrictions? Licensing bodies or others that you do business with apply restrictions that say, we're not going to provide you with anything because of COVID, and you can't operate because of that. Will that count? Probably not, but maybe. So that's something we're looking into trying to figure out.
And the other thing I think is going to be important is the calculation, right? What are the eligible wages, and how does me applying for the PPP loan forgiveness affect what wages count and what don't, at least for 2020? Because if I was closed and I say that those were the wages I used for PPP during 2020, those wages aren't eligible. Can I use the alternate period? Can I use the 24 weeks? What happens to those people that were forced to close do they still get the requirement of being having the credit available till they reach 80%? Or is it only for the times where we're closed? These are questions that we're still waiting on guidance for, and we don't know. So, we've been holding back on these videos because we were hoping that some of these questions would be answered. But we felt like it was time for the video to happen so that way at least our clients and people can start seeing if they're even eligible for these credits, or at least start preparing themselves for the eligibility to make sure they're there. And then we can kind of work around the calculations and the wages or the restrictions that they may have. But if you went under 50% or 20% of your wages, 19 versus 2020, or 20% versus 2021, you're eligible. Now the calculation needs to happen. So that was the basic gist of hopefully this video for the employee retention credit.
Yeah, I hope it makes sense. No, it's a complicated credit, more so than some of the others that we've discussed in videos. We've tried to break it down in a way that makes sense, and I hope that's come across. As we know more, we'll be reaching out to individuals. If you have questions or there's something that hasn't made sense, please do reach out to us, and we're happy to provide clarification.
We hope you enjoyed the 3 videos today, and we look forward to getting you guys more information as we receive it. We hope you have a wonderful day. Thank you.